This is an update on the Kansas City wheat contract or wheat market. It now reflects the December 20 contract. In this video, I'll be showing you two charts basically. Weekly continuation charts, volume-based rollover. So everything you see here is the stringing together, if you will, of lead contracts, high volume contracts over the course over the last several years, presently reflecting the December 20 contract. And so let me just start with, and this support is kind of a repeat of what I've been saying for, a couple of months or however long I've been doing the Kansas City wheat videos. We've got decent support in the upper $3, low $4 area now into late September. In every one of these charts I'm showing you, I'm giving you two sets of numbers for the indicator. One is the present week we're in, which is the week of August 24th, and it takes us all the way 4 weeks later to the week of Monday, September 21. So this is the week of Monday, August 24th, 472 even resistance. It drops to 462 and 3/4 by the week of, and for the week of September 21st. This is a speed line. This is our resistance. This is a 2/3 speed line. What I like about this speed line, it kind of jumped off the page at me because, I do a lot of channel formations and so forth that you don't even see here because I think if I were to include it, it would just look like a big mess. But this is also entirely consistent with a channel top right now against these recent lows. So I like that. That's what I look for, the symmetry between two different methods of analysis. And we have that here on the weekly continuation chart, presently at 472 even, and then drops to 462 and 3/4 by later September. This is an area that can contain buying through September, possibly through autumn trade into later year. And from here, once tested, the market can grow weak and fall all the way back into the upper $3, low $4 area. I don't expect that to happen. The signal for that would be a little difficult to ascertain, in my opinion. You probably need to pull out a daily chart and do it on a day-by-day basis. But because you've got little support levels on the way down, you've got the high of the low at 439.5. That's an initial support. You might make note of that. I don't know what kind of trading you might do. If it's short-term, then 439.5. You've got this old low area at 423 and 3/4. And you've got this old low area around 409 and 3/4. So you got a little stair step all the way down. But if you're just talking big picture, if you're talking from now into later year, you have a two-sided market really between presently the week of 824 at 472 even ceiling and presently the week of 824 at 399 and 3/4. So that's really the purpose of this video, is just to kind of give you a big picture analysis of the Kansas City wheat contract. Let me move on to the next chart. In the event, and we're much closer obviously to this ceiling than we are to this floor, in the event that we settle above this 472 even speed line, drops to 462 and 3/4 the week of September 21st. Let me give you some objectives here. I think ultimately, possibly for the year itself, between now and the end of the year, you might actually see a rally into the 520s, 530s. And this is a range, a band, if you will, based on these lows against this intermediate high. This is the classic channel top, but I wanted to squeeze this one in as well against this high here that precedes all of that activity, and it also roughly covers this low area. So there's some symmetry here. It's a 10-cent range that if we close above 472 even at the end of this week, the week of August 24th, we could see a 2 to 3 month rally into the 525.25 to 535 even area, which rises. Oh, this is a misprint here. That should be 525. Yes, bear with me. I'm going to do that right on the spot here, just so. There it is, 527.25 to 537 even. It doesn't rise very much. It rises about 2 cents over the course of a month. And by the way, as I keep mentioning in these videos, I put out these two different numbers based 4 exact weeks apart so that in the interim, let's say late August, early September, you want to know what this this speed line is. It's pretty simple math. 472 even minus 462 and 3/4. Divide that out by 4, and then you can subtract that however many times. If it's 2 weeks later, then multiply that times 2, of course, and subtract it from 472 even, and you'll have your number essentially. So over the course of 4 weeks, we're dropping about 10 cents. That's roughly 2.5 cents a week. Blah blah blah. If we settle above the speed line, this market could run over the next several months into the 520s, 530s, where I would expect us to top out quite possibly into next spring. Now, along the way, I'm going to throw this at you, and you can nudge me for this if you like. If we settle any week above 472 even speed line, dropping to 462 and 3/4 later September, any week above that, yes, I think we've got you should allow for the 520s to 530s over the following 2 to 3 months. And along the way, we can certainly top out on at least a weekly, if not a 2 to 3 week basis, what is presently at 504 and 3/4, and drops the week of September 21st to 502 and 3/4. So I didn't label that because it just gets a little busy in here. And I did take a look at this. This is a respectable resistance area, but because of the, I just like this symmetry. It doesn't happen often, but you've got both a channel top, a respectable channel top, and a descending 2/3 speed line. I'm saying that if we settle above, you should give this wide berth, this rally into the 520s, 530s. I think you should allow that. If we close above 472 even, you could look at the 525, 535 calls, for instance. Certainly expecting hesitation along the way in the very low $5 area. And there's precedent for that. You got 504 and 3/4 highs here, 505 and 3/4, 497 even highs. So yes, it's highly likely the market will pause, hesitate, maybe even back off into the 460s, 470s again, following a test of this area. Possible. But I do think that, once again, I'll repeat myself one more time, closing above this speed line of 472 even the week of August 24th should yield over the following 2 to 3 months the 520s to 530s. And then ultimately I just throw this long-term channel top here, which I don't expect to see anytime soon. But if we do see it in the coming, months, this is certainly in reach perhaps by this time next year, but I'm just putting it out there. That is a long-term ceiling that goes back several years and would be the next target if we were to close above this 527.25 to 537 even band of resistance. I think that's all that needs to be said. If you need an update on this, or if you need clarity on any of this, please don't hesitate to call, email, shoot me a text, whatever the case might be. I do keep an eye on these dates, so it'll be posted. This video link will be posted on the top of page 2 of the wheat letter, the daily Chicago Board of Trade wheat newsletter, so as it has been for some time. And this will carry us into later September. If you need an update, if you need clarity, what are you thinking now sort of situation, please don't hesitate to nudge me, and I'd be happy to update you on that information. And that's really all I'm going to say for this particular video.